Hey everyone, Nate Short here, and I'd like to welcome you back to another one of my short reports where I'm going to talk about what's happening here in our local real estate market. And I'm going to tell you right up front that this may be a little bit of a longer short report, mainly because there is so much happening that I think it's really important to go through some of these numbers and how they're affecting both buyers and sellers out there. So to get right to it, the overriding theme, good or bad depending on how you look at it, is that we have a severe shortage of homes right now. Now, if you've seen one of my previous short reports before, you know that I talk a lot about supply. And if we look cumulatively at both single family homes and condominiums here on the east side, our supply of homes has basically been cut in half. Last year, we were at about 1.8 months supply, and this year, ending January, we're about 0.9 months supply. Our active listings are down 48%, and our total closed sales for January were down 9% from last year, while our median closed sales price, which is what most people really care about, is actually down 3% from last year, which is the result of being in a rather flat to down market over the last 18 months. Now, we are clearly coming out of that market now, mainly focused by interest rates that are hovering right around 3.7%, which is down from 4.5% last year. Now, here's a really key statistic for buyers out there that are worried about where prices are at right now, and that is that it's actually going to be less expensive to buy today than it was last year, surprisingly, from an affordability standpoint. As you can see, our monthly payments, if we were to take the current interest rate times the median closed sales price, is actually down 11%. Now, I want to take a look at the historical information that we have just completed to give you an idea of how much of a shortage that we actually do have right now. Check out this data, which our team just put together, like I said, which shows the monthly averages between 2010 and 2019. And as you can see, for the month ending January, on average over the last 10 years, we've averaged about 1,177 active listings. Well, today we're at 664. The number of average pending transactions we have at this time of year is 554. Today we have 733. Our month supply rather, and remember that our average, these are just averages over the last 10 years, okay? The average in supply is 2.1 months supply. Well, today we're at 0.9 months supply. The average number of closed sales is 373, and today we're at 421. So clearly the theme for this year, or at least for this first half of this year, is going to be how do you compete in such an intense competitive market? Now for sellers, how do you properly prepare, promote, and price your home, the 3 Ps of real estate that we always say, so that you can get the most net proceeds possible and the fastest sale? And for buyers, how do you craft offers that will actually have the highest chance of being successful? Now I want to show you this graph, which I've shown several other times in other previous short reports. It's the affordability graph, because I think it will help you get some perspective at least on what the marketplace is like. And you know, a lot of buyers out there, they always tell us, well, we're concerned that prices are going to go down and that we're at the height of the market, and therefore they fear getting into these really, intense multiple offer situations and bidding over the asking price. But this graph clearly shows several things. First is that the blue bar represents the median closed sales price of a home in King County. And as you can see, prices actually have come down a bit from where they were in the highs of 2017 and 2018. And in fact, many of the prices are down 5 to 10%. So even though you may feel like prices are crazy high right now, they've actually bottomed out and are going to start going back up again, at least for the foreseeable future. Again, mainly driven by these low interest rates, which make home prices more affordable. Remember that for a 1% reduction in interest rate, it's like a 10% price reduction. So when you couple that median closed sales price being down a little bit with the interest rate reduction, that means that it's more affordable to buy houses than it was. So add in the fact that Seattle is continuing to grow at a really rapid pace, driven by Amazon, Microsoft, Google, Apple, and a host of other great companies. There's simply no better place to put your money, at least in my opinion, than it is in real estate, especially considering, if you're buying your home for your primary residence. However, if you're still concerned about prices going down, I just want to caution you that real estate is always about how long you can hold the property. If you look at this graph, Prices have pretty much all, at that graph that I'm showing you right now, prices have always gone up except for two periods between 2007 and 2012. And by the way, prices fully recovered back to 2007 levels by 2014. So that was a 7-year period that it took to regain your equity. But even if you did buy in 2007 and were able to hold it to 2014, you still had the benefit of being able to pay down the principal loan and at the same time write off the interest rate on your taxes. And of course, you can see if you were able to hold it beyond 2014, well, you made some serious money as we had that really rapid price appreciation from 2014 through 2018-19. It's really about being able to hold the asset. And if there's a downturn in the market, and of course, that was the worst recession we ever had back between 2008 and 2012, well, you want to be able to hold it through that period. And that's the main thing with real estate when we look at that. So that's essentially why we have not created, or there is not a bubble, which a lot of people are concerned about. So let's move on to the sell side and talk a little bit about why right now is such a great time to sell. I think the biggest thing in my mind is that you can never predict the top or the bottom of a market, like I said, but we know a few things for sure right now, and that is that interest rates are super low and there's record low supply combined with incredible demand. The result as we head into the spring market is that we are going to see a ton of multiple offer situations, and I believe that prices are going to quickly escalate back to where they were in 2018-19 and then beyond. We're going to accelerate past that. So we should see probably between 5 and 10% appreciation this year, in my opinion. The ability to pull money out of real estate now and out of Seattle and take it to other places where your dollar might go further is certainly attractive as well, especially for those baby boomers who are downsizing. I also want to show this other graph here, or rather put up this graph, which shows that what we call the heat map of Seattle, and we break each area out into a specific number. So for example, West Bellevue is area 520, Mercer Island is area 510, Seattle's area 700, Green Lake is area 705, etc. Well, we actually compare the inventory from the last 2 years, and as you can see, every single area is now squarely in the orange level, what we call a seller's advantage, which is 0 to 2 months supply. Some areas, such as North Seattle, have 0.4 months supply or 0.6 months supply, which is incredibly low. I've never actually seen numbers that low. But most of the areas are between 0.6 and 1 month supply. So depending on where you own real estate or where you're buying, you definitely want to know what's going on in that specific area that you're looking for, because real estate's very local. The other cool thing that we do is we actually track a 7-week running average of inventory by price range. So let's say you're buying $1 million house in Kirkland, which is area 560. Well, you'd be around 1.2 to 1.4 months supply. So at Windermere, within our group here, we have some really of the best information possible, the most in-depth information possible, which helps us negotiate better deals for our clients and gives the opportunity for us to give them better advice. Of course, it's one thing to have the information, it's another thing to be able to interpret it and apply it to the market, which is of course what my team and I do here on a daily basis. So moral of the story here for this short report, and I don't know I've been talking really fast, is that if you're in the market to buy or sell and you need help, well, please keep us in mind, as we are 100% focused on creating a great customer experience for our clients, and that adds a ton of value for you, and hopefully we're just adding a ton of value throughout the whole transaction. So if you'd like a copy of this report, well, we can do that. You actually can click on the link below provided in this post, and we'll immediately send you this entire report at no charge, of course, and we'll put you on our mailing list. So just put in your name and your email, your phone number, and we'll immediately send it to you. So guys, thanks for listening to this short report. I know it was a little bit long, but hopefully it was worth your time. And as always, we appreciate we appreciate all your referrals and are grateful for your business, and we'll see you in the next short report. Take care.